welcome back to the Dukascopy TV studio. I'm Natalie MacDonald. Now, as Q3 comes to an end, we've invited Ion-Marc Valahu of Clairinvest to come in and discuss some of the results from this quarter. Ion-Marc, thank you very much for coming in today.
Hello. Welcome.
Now, stocks started Q3 on an upswing really, but faced the dual pressures of a challenged global environment combined with concerns over the US Federal Reserve's bond buying program. How do you feel the equity markets navigated these challenges?
Well, I'd say fairly well. Pretty much the whole year up to the Fed meeting of the last week, we had a pretty nice uptrend. Of course, there was some little market adjustments during May and June, where the market started to be a little wobbly, given that the Fed started to change the language and added and hinted to the possibility of a tapering at the September meeting, which didn't happen after all. So I think that right there, the Fed made a mistake in communication. They should have done a little bit to calm and ease the markets, but they haven't. So the question is up in the air again as to when the taper will take effect. But nevertheless, equity markets generally have had a nice uptrend over the year. We're almost up 18% in the States, maybe another 11% in Europe. So I feel fairly comfortable that we've had a nice little year, given the past 4 years that we've had have been very volatile. So it's nice to have a normal market for once.
Amongst sort of the wide market movements that we did see within this quarter, who for you were the winners and losers, as it were?
Well, I think in terms of asset classes, the fixed income class was hit hard because just there was too much liquidity, so spreads were taken down too low compared to government debt. People felt very scared or not warm to the idea of going into equity, so they pile into in fixed income assets, credit markets, etc. And then when the news that maybe the central banks, especially the states, would start pulling money out, then the door just closed down and nobody was able to get out. At the same time, we had also a volatile period in the emerging markets, and that seems to be all corrected now, and we're moving off much healthier levels.
If we look then to the fourth and final quarter of 2013, with the equity markets showing increased decoupling from the real economy, as it were, how are expectations of global growth likely to tie in with your forecast for equity performance for the final quarter of this year?
The main factor right now is still the Fed, because since they haven't done anything in September, it's pushing it back to the next meeting, which could be October or even December. So that's one point. And then you have in the US the budget debates that's really heating up now and could cause a little volatility short term. Nevertheless, I think that if we can get through that period without too much of a breakdown in the confidence of investors and market participants, we could have a nice ride into the close of the end. The growth, even though it's less than expected in the US, it's still growing a little bit. We have a nice recovery. In Europe, the numbers are starting to show a bit of a recovery, even though it's anemic at this point. But still, if you look at if you compare equities to other asset classes, there's definitely a little bit more value into the equity asset class at these levels, given that bond interest rates are very low, gold is not yielding you anything, and credit is starting to get rich again. So I'd say that equity is the place to be for the year end. But you have to take into account that you could have a volatile month or a couple months until November. So we work out that political mess.
You touched there on the US, and last week's numbers out of the Fed clearly didn't meet the preconditions for tapering. And again, touching on volatility, we're looking at the fourth quarter, but could that volatility continue into 2014, do you think?
Oh, absolutely. Actually, our picture is that we would have a sort of a slow rise until year end, and then the problems will appear again or show up again because the Fed will delay its tactic of withdrawing liquidity because they're scared of pushing rates too high in the States. Then you have the situation in Europe where it's not resolved. All the politicians are saying crisis is over. I don't think they've looked at the numbers lately. So therefore, you have a sort of a period where It slowly moves up right now. Valuations are okay in Europe for sure, but the underlying problems have not been resolved. The structural issues in Europe have not been resolved, and the debt levels are still increasing. Maybe not as fast in the periphery, Italy, Portugal, and Spain, but now you're starting to see the core, especially France, piling on debt and just adding taxes and not working out its budget. So 2014 could be a bit challenging at the beginning for sure.
Ion-Marc, thank you very much for coming into the studio and sharing your thoughts today.
Thank you for having me.
For all of the latest FX news, analysis and reviews, stay tuned to Dukascopy TV. But for now, it's goodbye.